Hey, Steve Saretsky here. Welcome back to the show. I am in Omaha, Nebraska to see Uncle Warren Buffett at the Berkshire Hathaway annual AGM. Huge shout out to Neighborhood Holdings for putting this event together. Gracious host of the Loonie Hour as well. So again, for those that are in the mix space, you guys can go check them out. But I want to put this video together first and foremost to touch on the elections and Canadian and Vancouver real estate, obviously front in mind for everybody about what's happening. The elections are over. I really get some clarity about the country and our buyers and have more certainty now moving forward to actually step up and make decisions. I'm going to walk you through some of that thought process today. The Canadian elections, Canada elected the Liberal Party for a fourth consecutive term. What I find most interesting about this is that we went back to the polls only to reelect the same people. More so, the two that really stick out to me is reelecting two people. The guy that destroyed Canada's immigration system and the lady that destroyed Canada's public finances. Both of them did a horrible, horrible job, and Canadians rewarded them by reelecting them. So Sean Fraser was your former immigration minister who allowed over 1.2 million people a year in this country for almost two consecutive years. And of course, Christopher Freeland, who blew out the fiscal guardrails and imposed the ridiculous increase in capital gains inclusion rates, all of which now is being repealed. Again, Mark Carney is PM. He did a press conference the day that I'm recording this Friday, coming out and saying that they are going to be, as per their election platform, they will be tampering down on immigration. So they are proposing, or they are enacting, that non-permanent residents as a share of the Canadian population will drop to 5%, currently at about 7%. They're going to get that number down to 5. The only way to get that number down to 5 is to see population growth basically go to zero over the next 2 years. So you're going to be in a scenario in Canada where population growth is going to be basically flat as a pancake, assuming, again, the Liberal Party adheres to these policies. But so that's important in the context of Canadian real estate. We've got some data out of CREA, Canadian Real Estate Association, this week, which shows the state of the Canadian housing space. As of March, the data comes out for the month of March. National home sales were the lowest for the month of March since 2009. Again, that was just post global financial crisis. To give you an idea of housing sales activity across the country, we are currently running at levels last seen in March of 2009. If you look at national house prices now from the peak, this is the sharpest correction dating back to 1989. So this has been a significant and well-documented housing bust in Canada. Now, I would again point to you guys that these are very geographical specific nuances that I think are important. Again, if you think about the Canadian house price index, it's heavily weighted to the GTA and to Greater Vancouver. So when you see approximately a 15% decline in the national house price index from peak, a lot of that is stemming from the issues that are predominantly in the GTA. You know, if you look at the GTA, for example, versus what's happened in the Calgary real estate market, I mean, those are telling you two very, very different things. So that's first and foremost. But if you look at that, you look at national house sales running the lowest levels since 2009, and you look at where we are in the house price correction, still happening. But I think what's most interesting out of all of this is you say, okay, wow, you know, sales are anemic, prices are declining, they're still declining. But when you look at the inventory levels in Canada, like the actual number of homes that are listed for sale on the MLS, we're actually still below historical normal levels. So most of the basically the price decline has come from a steep and significant drop off in demand. It's been the huge drop off in demand coupled with new listings that are coming on at sort of a more normal pace. And that's basically you have more supply coming on than you do demand. So the huge discussion here today is that overall resale levels across the country are actually still well below historical normal levels. Yes, there are exceptions to the rule, and we're going to get into those exceptions to the rule because obviously we know there's an excess supply today. building in parts of the GTA, and in particular where I am here in Vancouver, in the suburbs. So we just got the data that came out for in the month of April on a regional level here in Greater Vancouver. Home sales again anemic, but if you look at what happened in the Fraser Valley in particular, the number of condo listings is at all time record highs in the condo space in the Fraser Valley. So we've been building like crazy out there. You've had a lot of investors, a lot of speculation, incredible price growth. Prices have doubled in effectively 6 or 7 years in the Fraser Valley. And now all of a sudden inventory is building, and it is building at a level that we've never seen in our history, in our times. And so this is in stark contrast to, again, what you're seeing kind of on the national level. So again, there's pockets of the market that I think are incredibly weak and incredibly vulnerable. But think about the massive price appreciation you've had in markets like the Fraser Valley, Langley, Surrey, Abbotsford. Prices just got so far ahead of themselves, and now they're going through a painful correction that, again, is going to last for some time. It's going to last for some time. It is not over yet. Given where current inventory levels are, you're going to have to get a surge in demand to work those inventory levels lower. And I'm skeptical that you're going to see that surge in demand this year. Obviously, a lot of this is going to depend on the trajectory of the economy and of the tariff war, which is really too hard to predict. But obviously, the biggest reason for mortgage defaults is actually job loss. So it's job loss runs mortgage defaults higher. So depending on what happens with the tariffs and with the labor market, that is going to dictate what happens with delinquencies, and that could potentially apply more pressure to parts of the market. But again, I really want to point you to that there's certain pockets. If you look at the inventory charts in pockets like the Fraser Valley versus, let's say, the single family housing market in Vancouver, where there is a natural scarcity, inventory levels are basically middle of the pack over the last 10 years. So these are two very, very different markets. One where you're building a lot of new supply in condos, and there's lots of land to continue to develop and build more supply that had a lot of speculation behind it. And the other market where, again, you look at Vancouver single family, and that's land that's continuing to densify. You're not adding net new single family houses in Vancouver. And so there's obviously a much deeper capital pool in that market as well. So they are two very, very different segments of the market. So, but if you look at what's happening in home prices, again, across the market in Greater Vancouver, the home price index down 3.5% in the Fraser Valley, 3.5%, and but basically only 1% on a year-over-year basis in Greater Vancouver. So again, pricing wise, the benchmark is showing you that things are actually relatively flat. But what I'm experiencing on the ground, selling real estate on a daily basis, is that there's basically a lack of liquidity in the market. It's very hard to determine prices today. Some properties are, on the market for 30 days. They get one showing, and that one offer comes in, and you sell, and you get lucky. And you have other properties that are sitting on the market for 30 days, no showings, no offers. You drop the price 30, 40, 50, $60,000, and you still get no showings out of it. And so this is a very difficult market to navigate. Obviously, it's a market where you're still seeing pressure on pricing because buyers are in no urgency to step up to the plate given the ongoing uncertainty with the global tariff war, so to speak. Now, what I am kind of keeping an eye on is now that the federal election has come to a conclusion, will buyers have at least some more peace of mind, some certainty? And again, remember, mortgage rates today at about 4%. They've come off. They've come off a lot. It's increased borrowing capacity. So there's a lot we'll watch for. But obviously, again, I think the writing is on the wall. There is a lot of inventory. The pre-sale market is basically non-existent today. Housing supply is going to roll over on the new construction side, but that's only going to happen after the pipeline of currently under construction units completes over the next 24 months. So the market is going to be more than adequately supplied over the next couple of years, and in particular in certain pockets of the market, like we talked about in the show, which is pockets of suburban GTA and pockets of suburban Vancouver remain the most vulnerable markets today. Still seeing a lot of pressure in the downtown condo market as well in Vancouver. Obviously, I think that's more though. I think that's more of a stigma issue than it is like an oversupply issue of let's say new construction. Because you're not building new construction downtown. What you have is a stigma issue around drug use, homelessness, obviously no longer having to be at the office 5 days a week. So you really need to be right in the thick of it in the downtown core. So all those factors are obviously weighing on that market. So again, a lot of nuances in every market. We'll continue to update you every single week, which is the objective of the show. Appreciate you guys tuning in, and we'll see you next week.